to the technicals. Tony Sycamore from IG joining me now. Good to see you as always, Tony. And I think when it came to the Nasdaq, the largest third quarter percentage since 2010. What's the Elliott wave showing you?
Well, a fantastic performance. And what the Elliott wave is showing us is that we are still extending the rally, which started from those lows back in April. I still consider it a fifth wave, but fifth waves can extend. And what we probably need to be mindful of is we have broken above some very important resistance on the weekly charts. And we now have capacity to push up towards 25,000. And if we really start to get some FOMO into the end of this year, it could go a lot further than that. So when we talk about a wave 5, it does mean we're getting towards the end of the movement. And after the rally, you can see there from the April lows, it's not a surprise, but it doesn't mean we're about to reverse yet. This could play out for another 2 weeks, another 2 months. We just need to be mindful that it has been such a strong move. And while it is getting overextended, there is just no sell signals out there at this point of time.
What about when it comes to our market, though? Because obviously a little bit of a different story, but you're saying as well, maybe there could be some signs for correction here.
I feel, the ASX 200 hasn't had a good month. September, it finished lower. And for the quarter, it finished up around 3.5%. Now, that compared to the Nasdaq, compared to the Hang Seng, the Kospi, the Nikkei, it wasn't a good performance. And you can see in the chart there why. It's just trading sideways, really rotating around this 8,800 level. And it just can't seem to break either lower or higher. But for me, it does seem to be building acceptance at these lower levels. And if I was to see a break below 87.30-ish, which is the lows we've seen over the past 4 weeks, I think that suggests we have another clean out coming, perhaps down towards 8,600, 85.80-ish. Down there, I'd be happy to be a buyer because then I'd expect to see the rally start to form in the middle of October for a push up into year end. But right now, the jury is out and the price action isn't particularly inspiring from what I'm seeing there.
Well, they say selling may go away, come back in October, don't they? All right, let's have a look at the Aussie dollar, the bit of the hawkish hold from the RBA yesterday.
Definitely a hawkish hold. Not unexpected given the data and given the hotter inflation prints we've seen. But the Aussie just remains in this 5-month trend channel, which we've been talking about for Jules, seems like forever. But, by and large, it got down to the bottom of that trend channel support, down around 65 cents. It bounced from there in the early part of this week, and the hawkish RBA hold, concerns about the shutdown in the US certainly have helped the Aussie get back up towards 66 cents. And I wouldn't be surprised now that after testing the top, testing the bottom, we rotate higher towards 67 cents. It's a fantastic market for a range trader, not particularly inspiring for a trend trader.
When it comes to commodities, oil bracing for a potential surplus. I filled up my car today. I just have to say I don't mind if there's a bit of a surplus. Gosh, petrol's expensive.
It's expensive given where the crude oil price is and given the Aussies at 66 cents. I 100% agree. But look, we may be about to see that, Jules, because there is talk that OPEC is going to go for a larger than expected 500,000 barrels per day increase at its meeting this weekend. I don't think that's factored in. And what I will say is that for the past 6 weeks, crude oil has been in a range between 61.50 and 66 cents at the top. And now we're coming to this OPEC announcement. And I think if they do go ahead and announce that 500,000 barrel per day increase, I think it's enough to push it through the bottom of that range. I'd expect it to trade down towards 58 cents on some liquidation of longs once it breaks below that range. And I could see it getting down towards $55. So yeah, really watching now to see what OPEC does. We know the Saudis are trying to regain market share and they are the largest player. So yeah, just watch this space. If it breaks below 61.40, 61.50-ish, there's further downside to go.
And gold still hovering around these records.
Yeah, it's just where does it stop? And there is no good reason for it to stop. There's only good reasons to be buying pullbacks. It is overbought. For the last 30 trading sessions since that 33.11 low, it's been higher on 22 days out of the 30. So we can see that it is getting overbought. We can see that it's had a fantastic run. It's up $550 since that August 20 low, up about 16%. An amazing run, but the reasons for it to be doing this are so solid at this point of time. And until something changes, it's just to buy the pullback in gold for mine.
All right, and digital gold?
Digital gold, not quite so inspiring. We've chatted about this now quite a few times, and it just doesn't want to go with the Nasdaq. It doesn't want to follow real gold. To me, it's just part of a correction that we have seen since it struck that high at 124,000. Now, that's quite normal. We can see it there on the charts. Bitcoin does go through periods of consolidations, sideways to lower. It doesn't change the fact that this is a bullish market. It's just where it can get to in terms of offering us a buy opportunity. I'd love to see it poke its head down towards the 200-day moving average, potentially down towards 100,000. I think if you were to see that in the coming weeks, that would be an excellent opportunity to reload longs in Bitcoin.